You know, guys, when I first discovered trading in binary options, something lit up inside me. It felt like a whole new world of the possibilities. You're your own boss, you can earn money anytime, almost anytime. Also, anywhere in the world, whether you're in pajamas at home or in a beach club or in the pool, as I did in one of my videos, by the way. And you know, before I even started trading, I had one big dream: to buy myself a brand new MacBook. And I remember at that time I had a really old laptop that was probably for 7 years with me. It was not really working well, and it was like this, like a big black laptop with a lot of dust on it. And I was like, damn, I just want to buy it, you know. And I didn't want to take any debts, you know. Because of this, I wanted to pay this in cash in just one day, and boom, and leave the Apple store with my new MacBook. And then I found trading. And of course, I was using martingale system, or the other words, catch-up system. It actually isn't an evil. It's absolutely great tool. And it can work really well if you know how to use it properly. And if you know how to control your risk as well. You will learn how to avoid the classic beginner's mistake, how to use martingale system and risk management without any fear, and how to turn trading into a real source of income. And my name is Lisa, girl in trading, and let's get started. So guys, here is our pocket option account, and of course today we are gonna trade. So I will show you one of the strategy with a few indicators and a lot of the situation that could happen to you also in the market, so you will already know how you need to behave and what kind of trades you can open out there. And of course, while we are trading, I will explain you more about the risk management, martingale system, and everything that I told you before. So firstly, guys, we go to the indicators and choose SMA and moving average. Just one with period 10, just the classic one. It's an SMA. Also, time of the expiration here is gonna be 2 minutes. The amount of money per trade for at least the first one is gonna be $100. Now I have $3,000 on my balance, so I can use this amount of money per trade. So that's how I will not risk too much, and also I would be able to do a catch up in case of loss. So here what we can see, it was the downward trend before. So here we can see just all going with some kind of the zigzag movements. So guys, firstly we need to go to the indicators. Today we're gonna use SMA and moving average as well. So if the pin bars on the histogram of SMA is above the zero level, it's a bullish momentum, so it's a signal to buy. If we see a negative SMA, that means that the pin bars is below the zero line, it's a bearish momentum, and this is a sell signal. So this indicator helps identify trend strength and potential reversals. So guys, here we can see some pretty huge green candles, so it's a great buy signal. And here we change the time real quickly for 3 minutes, and we open a buy trade for $350. So while we are waiting for the end of this trade, we're going to talk about with you what is risk management in trading, of course. So risk management is a system of rules designed to protect and grow your capital. It's not just about taking favor risk. It's a full strategy for managing your money, emotions, and probabilities in every trade. For binary options, where every trade ends in either a fixed profit, for example 92% as we have here right now, or a 100% loss of the stake, having a proper risk management is absolutely critical. Also, most beginners focus only on strategy and try signals, but even the best trading strategy won't save your deposit if you risk too much on a single trade. Also, trade on emotions and don't know when to stop. For example, even with a 70% win rate, you can still blow your account without a proper risk control. So what is the core principles of risk management in binary options? First of all, fixed percentage per trade. So stick to 1 to 5% of your total balance per trade. I actually recommend you to use 1 to 3% if you're just a beginner and you don't have that much money on your balance. For example, you have $500 on your account and you use 2% per trade. So that means you can use $10 per position. If you lose one trade, you only lose $10, not $50 or $100. So that gives you room to recover and keeps your mindset stable. Also, set a daily loss limit. Not so many people talking about this, but this is actually pretty important. So create a hard rule. For example, stop trading for the day if you lose, I don't know, 40 or 50% of your balance. Why? To avoid emotional trading and protect your capital being wiped out in one bad day. So guys, we have 10 seconds to the end of a trade and it's kind of fluctuating. You know, I was trying not to be that much focused there, not to be emotional. Oh my God, 2, 1, boom, we just saved our amount of money. Okay guys, it's perfect. It's not the best first trade for the video, definitely, but at least it was a little bit nervous for you. But even if I will lose this trade, I always can open the catch up or use the martingale system, as we can say the auto boards, because a lot of people know it as a martingale system, but I just created a new name for it. And guys, for those who's watching this video right now and thinking, this is all really interesting, but this is so difficult. I would never do it by myself and trade the same way. I have a solution for you. And if to be more clear, my absolutely free Telegram channel with, again, free signals on the pocket option. So you don't need to do anything. You don't need to analyze the market and learn trading for years. You just literally need to click on 2 buttons, buy and sell. So if you want more details, you know where the link in the description of this video, and we continue trading with you. So here guys, I change time to 2 minutes and we open here a sell trade for 2 minutes. You will ask me why, because it was the upward trend for a long time. Also, we can see our previous resistance level was achieved and now the chart starts reversing in downward direction. We see already a few red candles, so it's pretty confirmed here that is the reversal here and not just corrective candles. On the SMA, we also can see that the 4 last pin bars on the histogram is below the 0 line. We can actually open a rollover here, because as we can see, it starts going in the upward direction a little bit. As you can see, nothing is perfect actually, so sometimes this kind of the situation could happen. We still have the time, but I'm actually thinking about opening the rollover while we still have a time. So yeah, let's wait. So we opened the rollover. Now as you can see, I have 2 extra minutes to my existing trade already, but also the amount of money per trade doubles up as well. So, and while we're waiting for this trade to close, we will continue talking about the risk management. One of the other core principles of risk management, it's you can limit the number of trades per day. So for example, 10 to 20 trades per day maximum. Or you can set yourself another goal, for example 30 trades as well, if it's more convenient for you and you trade, for example, with short time of the expiration as me. So this prevents over trading, also mental exhaustion and random decisions. So as we can see, our trade is going pretty well. Okay, let's just wait. So it's good that we opened rollover here. Also, another core principles is trade in series, martingale system. If you're using martingale or recovery steps, this also falls under risk management. So set a maximum of 5 to 6 steps, but it's actually not unlimited, so you can do even more if you have more money on your account. And it depends how much money you use per trade, 1%, 2%, or 5%. Also, make sure the entire series fits within your daily risk limit. And the first trade should be small, as we were talking about this, 1 to 2% of your balance, so there's enough room for the next steps. And of course guys, keep a trading journal. Not so many people doing it, they're ignoring it too much, but I'm still gonna talk about this. So you can track date, currency pair, time frame, reason for entry, result. And also you can put some notes, for example, emotions, mistakes, or observations. It's really good, guys. Let me know more if you need this kind of the trading journal. Maybe I will do some kind of the document for you and I will just give you to you as a gift, so in my Telegram channel. So guys, let me know in the comments. And we have 27 seconds right now till the end of a trade. It's going pretty well. As you can see, it's a pretty strong downward movement, so it's really great that we clicked on the rollover here. So as you can see, rollover sometimes is really useful and helpful. Don't need to ignore it, but at the same time you could open a catch up after, for example, but here we just saved our time and got this reversal right now. So it's 3, 2, 1, and we closed the trade in the plus, and we earned even 2 times more as we opened the trade before. So it's really nice result, guys. So guys, now let's find another situation where we can open a trade. Okay, it's pretty interesting one. We can see a corrective candle going on right now, but actually it's gonna be a downward movement soon. For a lot of people, it's like, why do you think like that? But now guys, I will show you that. So let's just wait a little bit for a good entry point, because we can see still there green candles. So in here we open a sell trade for 2 minutes. So what we can see here on this trade, so prior to entry, the price was showing a bullish pullback after a strong downward trend. So the upward move stalls near a resistance level formed by a previous high. I can draw it for you. So for example, the chart could just break the resistance level. Wait a second. We have some problems here. Now the chart will go in this rectangle, but if it will break the resistance level before, it will go in the second one, for example, like this. But now, as we can see, it's reversing pretty good in the downward direction. We can see some strong red candles. It will definitely go lower and lower. So also the last candle before the trades is a bearish candle with a failed breakout attempt and a pullback. So it's a clear sign of buyer weakness and a potential reversal. And also local top is forming here, and visually it remembers a possible right shoulder of a head and shoulders structure. Also, by the moving average, for example, price moves close to the moving average and start to slow down without confidently breaking above. And the moving average is beginning to flatten out, signaling a pause or shift in trend toward consolidation or pullback. And by the OSMA histogram shows a decline in bullish momentum. The peaks are getting smaller and the bars start to turn downward. So this indicates a weakening upward move and likely a bearish correction. So guys, it's 4, 3, 2, 1, and we close the straight in plus. We can see the last 2 candles was green, so we almost catch it, but we were pretty lucky to close it in a time without any problems. So what we can see here, okay, pretty interesting. We can see it was the upward trend for a long time, then the price was trying to go lower, but the buyers were still trying to get this also piece of the pie, if we can say. Then it achieved the resistance level again, and now we can see some red candle going on the chart. So guys, let's take a look at this situation. So as we can see, it was the upward trend for a long time, with a lot of the fluctuation. We can see this price as the zigzag movement every time, and it achieved the new resistance level. We can see a pretty big shadow of the red candles, you can see here. So it means that the buyers were trying to break this level, but they couldn't, and the sellers just ate them. After this, the buyers were also trying to get back to the price, but boom, eventually, as you can see, there's some red candles appear on the chart. But actually, as we can see, after a lot of the attempts, buyers is still stronger than the sellers. We can see it by the moving average, also indicator, and OSMA. So let's open here a buy trade for 1 minute for $450, and now I will also explain you why. So here we can see a strong upward is clearly visible, formed by a series of consecutive bullish candles pushing the price steadily higher, and the price breaks above the previous local high, holds above it, and prints a new high, forming continued bullish momentum. Also, the candle at the moment of entry is a solid bullish candle with no significant upper wick, so it's a sign of buyer strength and lack of seller pressure. Moving average is also sloping strongly upward, and the price is well above the MA line, confirming a stable bullish trend. And guys, as you can see, it's absolutely strong upward movement going on here. So it's 6 seconds right now till the end. 5, 4, 3, 2, 1, and we close it in the plus. So now let's find some other situation where we can open a trade. Here, as you can see, it's going really well, even with the rollovers or something else, but we always can handle the situation with the knowledges that we have. So now I'm looking for a new chart, and while I'm doing it, I'm also changing the time to 3 minutes. Also, the thing that I wanted to say to you is that psychology is the part of the risk management. Okay guys, so now we'll find some currency pair where we can open a trade. Okay, for example, this one, we changed the time to 3 minutes. We wait for a good entry point here. It's obvious guys. What do you think? What kind of trade we will open? Of course, a sell trade. Here it is for 3 minutes for $450. We can see it by the moving average line, by the OSMA, and in general, it's just the downward trend going on here. So also one of the most important thing in risk management, of course, is psychology. So don't trade emotionally, guys. Don't try to win it back after loses when you already have, I don't know, 4, 5, or 6 or more loses. Just stop, continue tomorrow. Also, don't increase lot size after a win, and learn to handle losses calmly. So they're a natural part of trading. So how risk management works in practice. For example, the deposit is $500. Risk per trade, 2%. So you use $10 per trade. Win rate, for example, is 60%. And the average payout is 80%. Then daily trade volume is, for example, 20 or 30 trades. And with solid risk management, your losses are capped. You also trade calmly and with control, and your capital grows slowly but steadily over the time. So guys, here we can see that our price fluctuates a little bit, and it's really close to our entry point, but then jumping. So I'm thinking to open a double up here for $450 as well. We have enough money on our balance, so we can do it. So as you can see, we opened a trade almost at the same entry point, just a little bit higher than the previous one, and we have the same time of the expiration as the first one, so they will close together. So risk management, guys, is your insurance, your protection, and your control system. So it transforms holistic trading into a structured process and lock into a strategy as well, because you don't have to win every trade, but you must control your risk so your capital survives and grows over the time. Yeah, we just needed here more time, and actually the double up wasn't that needed here. Ooh la 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 la, it's really wait a second. 5, 4, 3, 2, 1. Okay, you saw how close it was? You saw how close it was. It's crazy. Oh my god. Oh my god. Guys, I think this is a pretty good result, actually. So, but let's open something more right now for $550. Let's find some currency pair where we could do that. Ooh, it's a pretty interesting one. You saw how strong here was the downward trend, and the candles here ain't one. Oh, no thanks. But we'll find something else instead. So here it looks like the start of the reversal and start of the downward trend. So let's change the time to 2 minutes here. Guys, let's wait for a good entry point here, and we open a sell trade for $550. Also, I wanted to tell you a little bit about the martingale system, because it goes together with the risk management as well. So the martingale system is a strategy where you increase your stake after each losing trade, so that your first win recovers all previous losses and generates profits. For example, the first trade, $5, you lose. The second trade, $10, you lose. The third trade, $20, you lose. You always double up the amount of money. Then the fourth trade, $40, you win. So despite 3 losing trades in a row, you recovered all losses and ended with profit. And what's the risk? Of course, martingale can drain your account really quickly if used without limitations or calculations. So that's why it must always be part of your overall risk management strategy. So that's why I decided to talk about this in this video as well. So how to use martingale system with proper risk control. So first, we'll set a maximum of 5 to 6 steps. So with proper calculation and a modest initial stake, 5 steps is the maximum that still allows you to recover losses and stay profitable. More than 5 steps becomes extremely risky. After that, it's time to stop or take a break, actually. And guys, there is 7 seconds only till the end of a trade. Let's see what we're gonna have. And 3, 2, 1, and we close this trade in a plus. That's perfect, guys. We had such a great result. We were just starting, I think, with $3,000. Now we have 5,700. So it's really good result just for a few minutes of trading. So guys, I hope you liked this video. Let me know in the comments if you already know what is the risk management and martingale system as well, and do you already know these indicators that I was using in today's video. And let me know if you want more information, more detailed strategy, how to use all of this in your trading session so you will not make the same mistakes as me. And I will see you on the next trading session. Bye bye.